CNBC TV 18, celebrating 15 years of leadership.
Hello and welcome to Markets Today on CNBC TV 18. I'm Ekta Batra and joining me from the Delhi News Center is Surbhi Upadhyay. Hi Surbhi.
Hi Ekta, what a day for the markets. You know, the second half really, I think the cookie just crumbled there, pressure coming in and pretty much across the board today, frontliners and mid-caps.
Yes, absolutely. All that and more in the next 30 minutes. Let's take you through the top stories. Markets succumb to profit booking in the second half of the day. The Nifty ends 0.7% lower, falling below the 8,300 level. Sensex loses around 200 points. Metals, capital goods and bank stocks see selling.
And beyond markets, on a day when the BJP notched up significant electoral gains in Jharkhand and J&K, the party could boast of little legislative success. The winter session of Parliament has ended without passing the insurance and coal amendment bills.
IT stocks lose ground as CNBC TV 18 learns that some big US banks may not announce large discretionary IT budgets at the start of 2015. Also, HCL Tech raises the red flag on third quarter earnings, says revenues could be impacted by as much as 210 basis points due to cross-currency headwinds.
Mid-caps fall in line with blue chips today in trade, with the mid-cap index losing about 0.6%. However, IPCA and CESC buck the trend and close in the green on brokerage upgrades. Gujarat Pipavav rallies 6% as the company announces plans to develop an integrated roll-on, roll-off yard at the Pipavav Fort.
Okay, well, let's tell you what experts that we have lined up on the show tonight. We have market perspective from Andrew Holland of Ambit Capital. On the corporate radar, we have Rajiv Bajaj to talk about the road ahead for Bajaj Auto, and we'll also get you a whole host of experts to talk about the poll results as well.
All right, let's straight away move then to the day's trading highlights. The Santa rally, which started so well yesterday on Monday, now seems to be losing out a little bit of that steam. Markets have snapped their three-day winning streak to end the day with some deep cuts. The Nifty tumbled below the 8,300 mark in what was quite a choppy session of trade. The Sensex also lost nearly 200 points, and losses accentuated in the second half, as we've been telling you. Anuj is now joining you with more details on really what played out on the street today. Anuj.
Well, a disappointing day for the market, but you have to put it in context. The market has been rallying for the last 3 days, and today technical factors played some part. The market saw some profit booking. Globally, things didn't look too good. And, there was some sense of marginal disappointment with what happened with state elections of J&K and Jharkhand, even though the BJP did well in both these states. So clearly, it was a bit of profit booking move that you saw in today's trade. In terms of drag on the index, really it came from the large heavyweights, Infosys, L&T, Reliance, and the financials, ICICI, HDFC, and Axis Bank. On the winning side, you had stocks like NTPC, Bajaj, and Bharti that did well. In the mid-cap basket, the trader favorite stocks in the high beta space were down. ADAG stocks were down, Suzlon was down, JK Tyre was down, and Jindal SAW was down. Overall, a weak day for the market. Tomorrow is expiry. Really, it could be anywhere, but as of now, Smart Money believes 8250 to 8300 would be the expiry zone.
Okay, Anuj, thanks very much for that. So it was a decline after 3 days of gains for the markets. But time now for some market opinion. We spoke to Andrew Holland, CEO of Ambit Investment Advisors earlier today, and he expects more volatility to play out in January. He also adds that he is worried that no decision on big impending reforms may lay undue pressure on the budget.
I do expect more volatility coming through in January as we try and wade our way through what's going to happen for 2015. I mean, we've had a nice bounce back in our markets, but to be honest, I'm not convinced. FIIs have been net sellers throughout, and it's rollover week, so it's always difficult to work out what the market's going to do. But maybe around 8,300 is where we settle. India really has nothing to kind of hold it up. There's no, whilst we're all very bullish longer term and earnings and so forth, which we talked about, I think a global fall, we don't have any kind of buffer to help us through. So it's very important that the government press forward and get the momentum of reforms going. We're still holding to the 9,000 Nifty, but that's got nothing to do with what the government's doing. That's more to do with the fact that we will have expectations, or interest rates will be cut by that time, or expected to be cut by at least 50 basis points in the first quarter. My worry is that if we don't have any bills passed in this Parliament session, then the budget becomes that big bang, big budget, everyone's going to be a winner, reforms, and it can't be that way, and so there's going to be some disappointment in that. So I'm just a little bit nervous about the fact that the momentum of reforms is not continuing at the moment, and that's my big concern for India, in a global sell-off which you could easily see in January.
The view coming in from Andrew Holland out there. Let's now move on and look at all the details coming in from the futures and options space and how trade's playing out just as we're moving towards expiry. Varinder Bansal is joining in with the details. Varinder?
Well, thank you so much. Clearly D-Day tomorrow, F&O expiry, which is, and it will be very crucial how, Nifty, especially that 8300 level behaves, in the trading day. Clearly you are seeing that there is huge buying which is now happening at 8300 put. 8200 put in fact as well, and there's huge call writing happening in 8400 level, if you're watching out for the January series. So that's a broader outlook if you're watching out the options data, where 8220, 8250 remains the base and 8400 remains the top for the market. Also in today's trade, whether the markets of course went for profit booking, but one space which was looking strong was the entire pharma space. You were seeing long build up happening on stocks like Wockhardt. Also, Glenmark was very strong. That stock was up by nearly 3.5%. Few large cap stocks which witnessed a long build up today were stocks like NTPC and Bharti. Both the stocks were very strong, up by nearly around 2%. IGL was one stock which was doing very good, was up nearly 4%. Other stock like Gujarat Gas was up 20%, but not in F&O. But IGL was up nearly 4%. Few stocks which were under pressure. The entire ADAG pack, whether it's Reliance Communication, Reliance Capital, we saw short build up happening over there. And stocks like HCL Tech, which saw profit booking happening in that stock, was down nearly 3%. Short build up seen on that stock. And stocks like Sesa Sterlite, JP Associates, and the entire mid-cap space like Jain Irrigation, Voltas, all were under pressure today. So as I said, tomorrow is an important day. Watch out for that, and watch out for that 80 to 50 level very closely.
Okay, Varinder, fair enough. Thanks very much for joining in. Well, one entire sector that was under pressure today was the IT space, which was down around 1%. Big boy HCL Tech slipped in trade today as well amongst that entire space. This is after the IT major said that its revenues for the October-December quarter might get adversely impacted due to the strengthening of the US dollar against various global currencies. Reema Tendulkar now joins in to tell us more about that. So, Reema, what else did HCL Tech highlight?
Thanks so much for that. HCL Technology has warned of a currency impact which will hurt them in the Q2 quarter. So they've indicated a cross-currency headwind of 210 basis points which will negatively impact their dollar revenue growth in Q2. Now this is largely on account of the dollar strength, which has resulted in significant depreciation of the euro, pound as well as the Australian dollar. And remember, about 43-44% of HCL Technology's revenue is non-US denominated. This currency impact, however, is largely an expected line. Analysts were penciling in a cross-currency headwind of 200 bips. Remember, TCS also a few weeks back in the analyst call had warned of a 220 bips cross-currency headwind. Apart from that, in its pre-earnings brief, HCL Technology has also said tax rate will be within the guided band of 21-22%. They expect a forex gain of $2 million versus their earlier anticipation of a forex loss of $2.5 million, and treasury income is seen lower. This had its impact on other IT stocks. HCL Technology, yes, was weak, but even the others like Infosys, Tech Mahindra were slightly muted in trade. TCS, on the other hand, was quite resilient, and that could be to do with the fact that the stock had already factored in the currency impact. We spoke with them another management, Tech Mahindra, so let's hear out what they have to say about the currency volatility.
It's going to impact everyone almost uniformly because dollar has strengthened. If we measure it in the dollar currency, yes, you will see an optical fall. If you measure it in any other currency, you may not see that fall. That doesn't mean that the business per se has gone down. It only means as reflected in a particular currency, it is somewhat lower. Therefore, it doesn't bother me.
And sticking to news coming in from the IT space, well, we say tough times call for tough measures, but this one seems quite a drastic measure. Global banks usually cut their IT budget when the going gets tough, but this time around they have decided not to make any allocation. Kritika Saxena is here with this exclusive story. Kritika, first of all, tell us, in case you've managed to pick up any names, which are these big boys from the US and why are they doing away with the practice of announcing annual budgets?
So, Jyoti, they have been struggling. The global banks, we have been talking about how there have been issues with respect to budgetary allocation, and hence over the last couple of months we have heard talks about the possibility of severe cuts in budgets across sectors, yes. But in this case, what I do understand is that UBS, JP Morgan and Goldman Sachs have decided to not allocate IT spending separately as a part of their calendar year 2015 budgetary allocation. Typically, remember, there is a separate tech budget that is allotted. Last year, in fact, most of these banks had a budget of around $1 to $2 billion. There was talk that may be slashed, but now that isn't being awarded altogether. What will happen, though, is that the deals will be given on a requirement basis. My sources have confirmed to me that there is no fresh deal, nor is there any renewal contract likely to come up in the first half of the year. However, in the second half, there are two deals that are likely within these three banks. So, Goldman Sachs doesn't have any new deals, but UBS may look at a $150 million contract. So that will be a very small portion spread across about 6 to 7 years, so not a major benefit coming in. And JP Morgan is considering a $500 million digitization contract. So net-net, the entire gamut of IT spending from BFSI is changing. And given that this sector is the one that contributes largest to top-tier IT companies, a big hit when it comes to a long-term perspective. But as Rima was saying, and as we heard Vineet and I talk on the channel earlier, things are changing now, and the IT players have to adapt to this.
All right, let's just see what they have to say when the commentary comes in at the end of the next quarter. Thanks so much, Kritika, for getting us that story. But moving on to another big story, which the Dal Street has been following very carefully today. The ruling BJP has managed to steamroll opposition parties in Jharkhand and has also managed to put its best show in Jammu and Kashmir till date. Let's give you the big numbers first up. Now, in Jammu and Kashmir, the Congress National Conference government has been thrown out of power. The voters have thrown up a hung assembly instead. The PDP has emerged as the single largest party, but it is short of a majority. There are reports that the BJP could join hands with the PDP to form the government in the state. And if that happens, this will be the first ever BJP government to take stance or to take the center stage in Jammu and Kashmir. BJP has won all its seats from the Jammu region and has drawn a blank in the valley and in Ladakh as well. Moving on, in Jharkhand, the BJP is on the cusp of an absolute majority. The state has seen only coalition government since it was formed in 2000. The ruling Jharkhand Mukti Morcha government fell prey to anti-incumbency and has been voted out of power. So big gains for BJP there in both Jharkhand and Jammu and Kashmir. Let's now hear out what experts are making of this development.
I think a lot of the people who were observers of the economy were hoping that leading up to the budget, this economic architecture, the pieces would fall into place, which is really things like the coal bill, the insurance bill, the company amendment law, the GST bill would at least have been introduced. And so we are a work in progress. I think what should have been done is not done, and maybe we are just moving this into the budget session as a co-terminus with the budget.
I think this is a very serious issue. They're trying to divide the country along religious lines. Many of the outfits of the Sangh Parivar are out there poisoning the atmosphere. And I think for the Prime Minister not to come out and make a clear stand on it, I think it shows the character of this government. So I have no problems with the opposition. I wouldn't see it as disruption. I think they're making a stand. They are digging in the Rajya Sabha. And it's for the Prime Minister to intervene and remove the apprehensions, if he can.
Okay, well, that's some political perspective. Take a break now, but coming up, a quick look at all the court action today as well as some trading ideas.
CNBC TV 18, celebrating 15 years of leadership.